All right, investors. I want to show you how you can use great fundamental indicators. Actually, one of the most important indicators to find great stocks among closest peers and see their target prices and how different analysts assigned fair value for your selected stock. And for this example, we can take NVIDIA shares. As you can see, I've already prepared, written a ticker over here. For this, we will be using financial modeling prep API endpoints, and we also will be using Google Sheets. Before you start, you should install Google Sheets add-on, and this should appear in your extensions over here. How to install it, I will put link for the step-by-step guide where you will be able to install this add-on and use it. This is very quick installation tutorial. You'll probably need 30 seconds and you will be good to go. So once you install it, I've already prepared formulas here. First, we will extract the WACC and ROIC. These are two very important fundamental indicators. If you don't have time for analyzing shares, you just may look at these indicators and make your very valuable conclusions. WACC is the weighted average cost of capital. In the simple terms, it shows what is the cost for companies attracted funding. As you know, company can borrow money from the bank, issue bonds or fixed income, some analyst traders call it, and issue equity, raise money through issuing equity, and all this attracted funding, they have their own costs, and WACC shows this weighted average cost, including the weight with respect to the weight of each attracted fund. On the other hand, ROIC shows the company's return. It's a return on invested capital. It is calculated as NOPAT, or net operating profit after tax, divided by attracted funding, which is equity funding or debt funding and any other funding like short-term debts and long-term debts as well. And this is ROIC. So ROIC is the return that company is making on attracted funding, and WACC is the cost the company is bearing on its attracted funding. And by comparing these two things, you can understand how efficiently the company is using its funding. Well, you don't have to calculate it manually, just copy this formula from here. After installing Excel add-on, then in Google Sheets, press equal, copy this formula. As you can see with Apple, we just substitute Apple with NVIDIA. Just click here, and this A4 is the WACC. As you can see, header over here in the instructions. Of course, you can leave this field blank, and in this case, it will extract you a lot of data, other indicators, but since we are interested in WACC, I have written the WACC in this field over here. Then I press enter, and I can see WACC, which is 1141 for NVIDIA company. So this is the cost for attracted funding, 1141%. Now let's do the same for return on invested capital. For this, I'm copying this formula from here and substitute this Apple ticker with NVIDIA. I'm sorry. Like here. And now, as you can see over here in the details, you can always enlarge it and see details. This is limit, how many periods are fetched, and the headers. Of course, you can leave these fields blank, but since we're only interested in this ROIC field, I'm putting this ROIC field over here. And now we are fetching the data, 0.77. Of course, you can highlight this in percentage terms, and we get 77.28. It's a return on invested capital, so the company is making 77% return on its attracted funding and only 1141% beating the cost. Now, if you divide 77 by 11, you get this ratio, which is 7, which is a great ratio. And now what you can do, you can compare this to your closest peers. For this, you can go to FMP website. I will put the link in the description, and this in the search bar you can type peers and you see the stock peers. Then open this endpoint. I will put the link to this endpoint down to this video together with instructions on how to install Google Sheets add-on. And now when you click on it, you can see it's for Apple. Just in your command bar, replace the Apple ticker with NVIDIA. I mean, in the upper right, the text field where the address of this website is written, simply replace it with NVIDIA and you see NVIDIA's closest peers. Now you should do the same comparison for other stocks like Intel, INTC. Open it again, and in this case replace this NVIDIA with INTC. Let's actually do it right now. INTC, just to make the comparison. And as you can see, Intel has a return on invested capital 19 and the cost of capital is almost 7. And now when you divide 1950, let's divide it, 1957, when you divide by 693, oh, why is error? Yeah, the ratio will be smaller than 7, 2.6. Why it's not dividing? 1957 divided by 693. Error. Yeah, 282. You always, we just have to replace this thing. 282, the ratio, as you remember, NVIDIA had 7 and Intel has 282. So NVIDIA is using its funds better, more efficiently. Now, the next we're gonna see the target prices for NVIDIA shares. For this, we will copy this thing. Let's put equal sign, and now we replace this Apple ticker with NVIDIA ticker. But in this case, it's not NVIDIA. Let's do it. Yes, and now you see different investment analysts, their names, their companies, and what target prices. This is the published date. So these are the most recent updates. This is the target price that analysts calculated on NVIDIA's shares. This was the stock price when posted. And you can also use another gradient point. We'll just put it over here above, just to see the consensus or average target price for NVIDIA. This is a quicker approach if you want to see the summary. As you can see, the target high, some analysts established the high target price, some analysts established the low target price, but it's not realistic. And the consensus target price, the average target price among different analysts, is 120. And you can also see how the target price is changing from analyst to analyst. What's the highest, what's the lowest, what's the target median is 127. And also you can see in comparison to its peers how the target price was changing and what to expect from NVIDIA's shares. This is it, dear investors. That's how you can analyze your stock quickly and see if it's using its attracted funds efficiently. And you can also see how what analysts think of your selected stock and what is their target price, when it changed, when they initiated the target price change, what was the analyst company, and analyst target prices change will directly affect the stock market price, because if a lot of analysts changing stock target prices, increasing the target price, then investor sentiment will increase and investors will start buying this stock more and more. And also, if you see that the company is using its funds more efficiently, this will benefit the company in the longer term. So I hope you understand this video clearly, and thank you very much for watching.